reaction. Q3 earnings happened. Me and Tom actually streamed it live on this channel, and about 1,200 of you showed up. So thank you so much for showing up to this tiny little channel and supporting us.
It was amazing.
Let's start off with you, Tom. I mean, there's a lot to talk about, but what are your overall takeaways from Palantir earnings? They put up 478 million in revenue, and overall, not a horrible quarter, not an amazing quarter. What are your thoughts?
I feel like people are missing the big picture here, and this is something that I've talked about in my video post earnings, and I'll do a little bit of a more in-depth video later today, in which I'll elaborate on that. People look at this in a very isolated manner, and they look at Palantir as if there's no macroeconomics outside of Palantir, and it's very isolated analysis. And yes, you can look at the numbers, and you can definitely see a deceleration in the revenue growth, especially in the commercial side, including the
Yep.
U.S. side. That is true, and but the thing to remember here is just a few little tidbits. It's not like Palantir is operating in a vacuum. Really horrible things happen in basically commercial enterprise. You can see what happened with Google, with Amazon, with Microsoft. We saw across the board corporate spending, especially on the digital transformation. They basically slashed because everybody's fearful. Nobody knows. There's a lot of uncertainty. So people are slowing down spending. Everybody does, individuals, companies. So Palantir isn't immune to that. And people will criticize Alex Karp by saying, well, Alex Karp said that they're built for tough times. Well, wait for it. Wait what happens in the next quarter and the next quarter after that and see how this plays out. Because for sure, when inflation and recession sneezes, everybody gets wet. Now, what I want to put in context here is, yes, the second half of the year slowed down as far as revenue growth, but it's not like the company isn't growing. It's still growing. The overall growth for the year will still be 23.3% if they hit the mark for Q4. So Q4, they're aiming for 1.9 billion annual, 500 million quarter, which would be the first 500 million quarter in Palantir's history, which is
Yep.
a massive historic milestone for them. If they do it, they'll give you a 23% growth, over 23% growth in a recession, pandemic, inflation, high interest year, which is not something that's easy to find. Yes, it's not as good as Alex Karp initially thought it would be when he guided for 30, but the company hasn't changed its 5-year plan of giving 30 CAGR over the next 5 years. So they are expecting a little bit more fluctuation. What I will say here is that, look, there's definitely signs of concern, but more on the macroeconomic side. I think Palantir has shown me they've improved on their go-to-market strategy. They've definitely figured out a way to get more clients through the door, and the customer growth shows it. We had an incredible growth on the U.S. commercial side, from 60 clients to 130 clients over year. We're definitely seeing the impact of this new strategy. I'm not super excited about the company cherry picking data in the presentation to make it look better than it really is. But on the other hand, pretty much every other company does that. I think Palantir is a little bit more blatant with it, so that's why people get triggered.
Yep.
Yes, they cherry pick for sure, combining commercial and government. Yes, that sucks, and it sucks that Alex Karp would not do the corpo speak for the Wall Street institutional investors. But it's not a deal breaker for me because it doesn't change the overall picture, which is that this is a company that gives you double digits, 20% growth. They are ramping up like crazy. Just to remind you, just 2 years ago, in September of 2020, they did 280 million of revenue per quarter. If everything goes according to plan, and the plan is very modest, all they're talking about is 16% growth year over year for next quarter. If everything goes according to plan, they'll give you a $500 million quarter in December, which means they've doubled their revenue in about 2 years. And I think that's pretty cool, to be honest. And I feel comfortable knowing that this company is going into a recession year, into a high inflation, high interest rate year with a lot of cash, with no debt, as we spoke many times before, with a management team that actually figured out a way to talk to clients, which figured out the loss leading kind of modular go-to-market strategy where you just get the clients first and then use the stickiness of the product to actually increase revenues later. I'm very comfortable as a Palantir investors, and I get why some people aren't, and that's fine. But it isn't a company for everyone, and there's plenty of other opportunities out there. In fact, Alex Karp said it. If you don't see it, that's fine. And that's where I will not unfriend anybody on social media because they think Palantir is a bad investment. It's fine.
Yeah, I think the last thing you said is the most important, that it's not a deal breaker. This quarter is not a quarter where you exit the stock. because something broke your thesis, but it's also not a quarter where you completely load the boat because you're like, all right, the stock's going to go to the moon. I think
Yep.
you need a couple more quarters of data. You need to see how 2023 goes. The company says they're built for tough times. 2023 looks like it's going to be tough. They have 2.4
Yep.
billion in cash. They have no debt. As you said, a $500 million quarter in software is not easy because you have to convince all these companies that your software is worth paying for during these tough times. So to put up 478 million in a tough quarter, look, it's nothing to be ashamed of. The one thing that is not the best is their operating margin going a little bit down and their growth not hitting 30%. So in
But
order
that's
for them to,
strictly headcount. I checked it today after I
it's
was
more
deep diving.
employees, right? Hiring more
It's
people.
just employees. So I was
That's what I
going through
thought.
the data. I'm prepping for my deep dive, in which I'll dive into every single number. I was looking at it. I was like, oh my god, they achieved, whatever. Right now we're at 20 something percent. I think we're at 22% growth right now, or something along those lines, of 20, whatever it might be, over 20% growth. And when I look at the cost structure of the company, that's where the hidden gems are. So if you look at the cost structure, G&A flat. So no increase in G&A whatsoever, which is incredible to me to grow so much without any increase in G&A. As far as marketing expenses, I believe they were up 6%. I don't remember, like the only metric that actually grew, which was like significantly, was sales and headcount, and that
That
was like
makes sense.
18%. So
And because they're
even
hiring,
that,
they're not firing right now. Like
yeah,
other
they're
companies.
hiring, and that's partially why you still have stock-based comp, even though it's kind of going down. But it is
And
like,
stock-based comp is down 29%, even though it's still
yeah, some
high.
of it
It's
has to
down.
do with the fact that the share price is dropping, so it's not all like 100% like pure. It definitely is skewed because of the share price. As the share price drops, the impact of the stock-based comp on your cost structure actually diminishes. But some of it has to do with the diminishing price of the stock price. Some of it has to do with the fact that they're just giving out less. The only increase in their cost structure beyond flat and 6% was sales team. That went up by 18%, which is still below the growth rate for the 23% they'll give you at the end of the year as far as revenue growth. So, for me, this is like very glaringly obvious what's going on here. They're sacrificing what seems to be kissing ass and showing great operating margins now in order to ramp up and get salespeople through the door so you can actually get clients and give you a banger of a year and a half, or in 2 years, when they actually start reaping what they sowed. And I get why it doesn't work for a lot of people. I mean, there's a lot of impatience, especially in a bad market where people are already down big. You have this voices that are telling you, "Hey, this is a bad company." Well, they went down from whatever they were, and there's a lot of FUD. Some of it,
So did every other company.
yeah, exactly. So
Google's
not
down
every
45% for the year.
yeah, not every other company, but definitely in the tech industry, in the B2B industry, the pain is felt. Also, I heard a lot of FUD over the the social media sphere of the past day about, oh, this is a company that's selling shares. Insiders haven't sold a share in like a year.
No.
That I mean, I'm talking about Carp. Obviously, Carp hasn't sold a share, I think, since September, October. And people are talking about SBC, which is coming down, and it's not anything unusual. I think there's, in general, um, the worst thing that happened to Palantir is that it went too high too fast with the whole craziness of the pandemic when it shot up to like $35. If Palantir doesn't do that and it just slowly, organically grows into a 11, 12, 13, $14 stock over the past 2 years, $15, $20, then I think we don't have all this hate that's coming towards it. I think a lot of people jumped in on this thinking, oh, this is the company is mooning, and they got caught. And I'm at this point, I will tell you something. This is probably, if I had to choose 2 or 3 companies to invest in, except an index fund for the next 2 years, Palantir is one, for sure, for sure. But I get why some people don't see the vision, and that's fine. There's gazillion other companies for you guys to choose from. That's fine.
Okay. Moving on to our next
Did you
topic.
buy more? I have to ask you a question. Did you buy more?
I bought 100 shares. When it dropped under 7, I was like, why not?
I bought more
It's
too.
like,
I'll talk about it in my
uh,
video. Yeah, I bought more too. I mean, it's too, when it was below 7, it was, I mean, pretty cool.
and it might go below 6, but the last thing I'll say on this, if you believe in the technology, which is why I think
Yep.
most people have invested, then they're just executing. Like Tesla Q2 2018 wasn't amazing, it wasn't horrible, it was neutral. You move on, you give them some more time. You have to have some grace with these companies and let them do what they need to do.
It might actually go even as far as $5. It can go to
Yeah.
$5 in this macro. There's no bottom to this. There's no place where I tell you, oh, 6 is definitely the bottom. It might
And
go
that's why it's
5.
good they have no debt. I mean, like,
I mean,
that's why it's good they
operationally
have
speaking,
cash.
people usually say when the stock goes like into the single digit area, like $5, or they usually headed for bankruptcy. This company is cash flow positive. They're sitting on a pile of cash. They have no debt, and they have growth in the client base. I mean, this isn't a company that's in any jeopardy. In fact, it's better positioned than 99% of other companies right now in the market.
And if you do the numbers on the US government and attach the regular multiples on it, it's a $15 billion company just based on their growth in the government. And so it's being valued at under 15 billion for the government growth and the commercial. So the market hasn't caught up to it yet. And that's for good reason. The market doesn't need to right now because the macro sucks. It's going to take time. And once they do catch up, hopefully it's a home run.